Hello and welcome to interest.co.nz. I'm Gareth Vaughan and I'm joined by Rodney Jones, who's the principal of Wigram Capital Advisors. Welcome, Rodney, to interest.co.nz. Appreciate your time. Now, you've been involved, or you were involved quite early on in the COVID-19 picture in terms of modelling the spread of COVID and models that were used here in New Zealand by the government, but you also lived in China for a long time, so you've got a lot of knowledge about what's going on up there. Should we kick off by just having a look or having a chat about what your modelling is telling you about, I guess, COVID globally at the moment?
Yeah, so what we started modelling COVID right from the start. I mean, we're a China-focused firm. We look at all of Asia primarily, and we'd also looked at SARS. I'd experienced SARS in Hong Kong in 2003, and so we had all the data. I'd kept the data. I found an old spreadsheet from 2003 that I hadn't opened in 17 years that had all the data in. So we got to work modeling SARS to start with, looking back at the Hong Kong experience and China experience in 2003. And then that allowed us to be analyzing the Wuhan data. And then we're actually broadening it out across cities in China until they stopped publishing data around mid-February. And so once it started to spread, we were able to take that modeling approach and apply it to Europe, the United States, and then to New Zealand when it arrived here. It's not an epidemiological model, but it's based on models that were constructed after SARS by epidemiologists. But you have, in some ways, the modeling in epidemiology is a little bit like economics, where you have either big structural models or you have short-run models where you're just trying to forecast, a month or two ahead. So we had a model where we were just trying to forecast a week to 14 days ahead, a little bit beyond, but just to have a guide on the path of the virus. And that's what we've done for, really, we still do that each day across countries in Europe, the United States, and, of course, in Asia.
What is that telling you at the moment, at this point in the pandemic?
We are learning, well, there's two. I mean, I've just been looking at Indonesia today, and we see the same thing in India. It's really difficult for developing countries to cope. They don't have the public health systems, and you get this steady run of cases. What we're seeing elsewhere, even in the United States, they've started to bend the curve. We're getting a bit better at living with it. In the West, at least, we've had the government ability to deliver financial support to households and businesses, whereas in the emerging world, they don't have that. So the shock has been quite varied. We are making progress. Unfortunately, the window for elimination was missed. I think the advantage we had in New Zealand is that we were close to China, close to Asia. We could see success stories. Europe and the US was slower to follow what had happened. But even in countries like Korea and Japan, who got on top of it early, Singapore, Hong Kong, have always had second waves, have struggled to contain the virus. So outside of Taiwan, Vietnam, China, no one has successfully stayed eliminated. It's been a continual battle. But on the whole, we are doing better. But the hope is that once we get into 2021, we'll start getting vaccines deployed. And they don't need to be perfect. They just need to help us with social distancing to break the chains of transmission and allow us to start containing the virus. And in the emerging world, vaccines are going to be critically important because they just don't have the ability to break the chains of transmission.
As we speak, we're sitting here in Auckland speaking via Zoom, and obviously we've got a level 3 lockdown in place in Auckland with a community transmission emerging 10 days or so ago. What's your take on how the authorities are going in terms of combating this cluster and whatever else might be out there? And also, I guess in terms of the elimination strategy, where do you see New Zealand at the moment, and I guess going forward from here?
Okay, so there's been a lot of criticism. I call it carping. I joke to people that with the All Blacks in 2011, no one after the event complained that they only won 9-7. This is really about getting the job done. And in rugby terms, sometimes you have to win ugly. It's not about perfect. And I think there's a lot of demands for perfect in New Zealand. And in reality, no one has achieved perfection with this virus. It's very tricky, it's very dynamic, it moves in ways we don't understand still. What we did right was once we realized we had community transmission, and it wasn't too late by then, from index 1 to the family, it was a handful of cases, we went into a regional lockdown straight away. That's the ideal policy. We've achieved elimination. We had 100 days free of the COVID. And then we had an outbreak, we went into a regional lockdown straight away. Now, that regional lockdown was able to stop the virus spreading. So we didn't have to apply lockdowns beyond Auckland. So 2/3 of the economy has been able to continue to operate fairly freely. 1/3 being Auckland is in a lockdown, but we've been able to keep it at a level 3 lockdown, which, estimates are, 10 to 20% loss in GDP on those days you're in lockdown. And the good thing is we've made relatively rapid progress. So the sorts of models we use would suggest that we'd be generating 20 or 30 cases a day by now. We're not. It's 5 to 9. Today wasn't so good, not so good, but we'll see what happens tomorrow and the day after. It's literally a day-by-day thing and feeling your way down a darkened hallway. But what is good is we've contained it to a cluster. It hasn't spread. It hasn't left Auckland. We can continue to contain it under a lockdown 3, and hopefully it's not too long before we get back to elimination. Now, what we saw under level 1 is there's a big payoff to elimination, and that's what we see every day with the Chinese data. We had some Taiwan data yesterday, very strong. You get back to elimination, your economy normalizes very fast. I think a lot of the debate in New Zealand has missed, and talk about Sweden, has missed the gains from elimination or the payoff from elimination.
At this point, you would argue that New Zealand's best case scenario for the next few months is getting back to level 1 and staying there, if we can, of course.
Yeah, we don't know how this spread. It's a really odd. It's the initial outbreak. In this case, is not well understood. This genome hasn't been seen in New Zealand before. We don't understand how it got into New Zealand. We don't understand why it began from a cold store. So there's a lot we don't understand. Vietnam also had a mystery outbreak that they never understood. We may never understood what happened. But the point is, we responded, we acted quickly. We can get back to elimination. We've made some changes on the border. But it doesn't look like this was like in Melbourne. The explosion in Melbourne was traced back to 3 travelers who were infected. We don't have anything like that. And so we should be able to get back to elimination, get back to level 1, get back where we were 2 weeks ago. And with the improvements in the border, we should be confident that we can do that. But we also hopefully will come out of this saying, well, we know what to do. This is not about perfect. Mistakes will be made. It's a very complex process. And then, if we get an outbreak, we don't need to panic. We have the tools to contain it. We can do mass testing. We can contact trace. We can lock down a region, and then we get back.
Now, of course, you're an economist, so you're also looking with interest at, I guess, the response from the Reserve Bank, central banks around the world. Now, in New Zealand, of course, the Reserve Bank here is pursuing quantitative easing, buying government bonds up to $100 billion worth by June 2022. What's your take on the response of the Reserve Bank in New Zealand and central banks more broadly?
So where I sit, and this is an emerging debate, but I worked on Japan for a long time. I've worked on Japan for over 20 years. So I worked on Japan and visited the Bank of Japan regularly when they went through that process of getting to 0 rates, and then the first QE, and then the second, and then eventually negative rates. So I followed that process closely in Japan. And I think one of the side effects of QE, there's a perception that QE is a free lunch, that you just have the central bank buy the bonds and then the money's disappeared or money's created and you never need to pay it back. Now, if you stay in a permanent deflation like we've seen in Japan, the Bank of Japan owns about half of outstanding Japanese government bonds. But at the same time, the banks have enormous claims on the Bank of Japan. So if we say, okay, let's merge the central bank balance sheet with the government balance sheet, you end up with the government debt, in a way, being overnight, the bank's own claim on the central bank that is part of the government. And what you've done is exchange government bonds for a bank claim on the central bank. And I think one of the lessons from COVID is how we'll have to, in a globalized world, we have to live with risk and we have to live with uncertainty. And we can't be sure what the next 10, 20 years hold. It may be deflationary, but you can also tell a story where inflation comes back. And how would inflation come back? Well, we've had the US-China breakdown, we've got deglobalization, we've got Xi Jinping talking about moving to a more inward-looking strategy, a fortress China, where they use import substitution. We will probably talk, we will have to address climate change. That will involve carbon taxes, probably border adjustment taxes. And then as we do that, the age of ever falling import prices or ever falling traded goods prices will be behind us. And so we have to be open-minded that inflation comes back, and that after every pandemic in human history, economies normalize, and we'll normalize. We'll leave COVID behind. We'll get a vaccine that will work. And what we have today is not what we have forever. This will pass. And then, so you have to have strategies that are resilient to different paths. And a very large QE policy is not resilient, because what you can end up having is the central bank will have to start selling the bonds they own at higher interest rates. Now, sure, you take a loss, but in a sense, the government is having to finance at a higher interest rate, whereas we could all be issuing 10, 20, 30-year bonds and funding at this very low rate. And so I think there needs to be more debate about QE, particularly with these very big numbers now. So as an emergency measure for this year, it made complete sense. 10% of GDP, 30 billion, yeah, we understand that. The Reserve Bank of Australia has done something similar. But what the Reserve Bank in Australia has done is, rather than buying long-term bonds, they focus their buying in the 3-year, and they've said, we want yield curve control. We want to keep the 3-year rate at 25 basis points. And because that is credible, they haven't had to buy so many bonds. And so I think we should be debating different policies. And I'm not convinced having the Reserve Bank buy $100 billion of bonds is the right policy from a medium-term basis, that it's resilient. And I don't think we've had enough debate and discussion around this.
Are you suggesting that the RBNZ should pursue a strategy more aligned to what the RBA's done, or is there something else you have in mind?
No, I would tend to be more a follower of the RBA, actually. I mean, in New Zealand, our official cash rate's 25 basis points, but you have something called the remuneration rate, which is the rate that the central bank pays banks. Now, in Australia, that is 10 basis points. So while their cash rate is 25, it's 10 basis points in Australia. They have lower rates than we do. Why can't we cut to zero? Are there banks that can't cope with zero rates today? Why is the Reserve Bank not cutting today? Now, in March 16th, the Reserve Bank made a commitment to keep rates unchanged. That was a form of forward guidance. But that's not supposed to be a binding constraint. They can change that. The facts have changed. What did Keynes say? The facts change, you change your mind. We expect that with central banks. We expect central banks to deal with what's in front of them. And the question to ask is, why are New Zealand rates not at zero today? Why are they still at 30 basis points? The bank bill rate is up at 30 basis points. And that's what drives lending rates. And so now we're talking about maybe negative rates will be on the agenda in 21. And yet it's not clear why rates aren't zero today. And so I think there's different things that the Reserve Bank could be doing that they're choosing not to do. And it's not clear to me why they're not doing that.
They did say that the trading banks here, some of them aren't actually ready, aren't prepared for negative rates, and they've asked them to be prepared by the end of the year. Do you think they could have done that quicker?
You know, I can't comment on the trading banks, but what I do know is when I covered the Bank of Japan, they cut from 25 to 15 to 10 to 5. And then eventually they went to zero. They actually went to 1 or 2 basis points. So we've seen central banks, there's nothing magical about 25 basis points. So we could have had, we could have had the remuneration rate set at 0 and the RBNZ lending rate set at 10 basis points. There's nothing to stop that, or 5 basis points.
Before the potential for an inflationary environment and deflation as well. I mean, obviously they're quite different. What's your sort of best guess on which one it will be? I guess if you look forward a couple of years.
I have a contrarian streak in me. And people accuse me of not looking around one corner at times, but looking around 2. So I don't know the future, but I've lived with deflation for a long time. By working on Japan, I've been living with deflation for much longer than the average analyst. And now everyone understands deflation. I just have in the back of my mind that we need to, that in a world of deglobalization, of trade frictions, of the need to price carbon effectively, of supply chains being disrupted by geopolitics, we have China, official papers threatening to invade Taiwan. Taiwan is a critical part of the Western supply chain. The world we're going into is much less certain than the world we've lived in the last 30 years. And I can see paths where inflation is an outcome. I'm not predicting it, but I think the future is very two-sided. Deflation is not guaranteed. People assume with aging population, deflation is a given, and I don't think we can be so sure. I think we have to be open-minded of a return to inflation, even if you don't necessarily forecast that. It's the sort of thing, it may not be around one corner, but it could be around 2.
Rodney, thanks a lot for that. That's Rodney Jones, who's Principal of Wigram Capital Advisors, and I'm Gareth Vaughan at interest.co.nz.